Okay, so now you've learned how to identify a trend. You've learned about finding a reliable support or a resistance level, and you've learned about the trigger price action. It's time to put everything together into the strategy. So first, let's take a look at the long setup for this strategy. And here are the specific entry rules when going long for a trend continuation entry. So again, step one, ensure that the pair is on an uptrend on the 15-minute candle time frame. So again, price is above the 18 EMA, 18 above 50, 50 above 200. Okay, and we want to see the current swing high higher than the previous swing high, and the current swing low higher than the previous swing low. All right, so that's the first step. So again, you want to see higher highs and higher lows. All right, next. Once we ensure that on the 50-minute time frame, we've got a clear uptrend, we then check on the hourly time frame. So click on hourly candles and ensure that on the hourly candles, H1 candles, you also see the 18 above the 50 and the 50 above the 200. Okay. Next, step three, ensure that the current swing low is a reliable support level. How do you know? Well, either it's at a moving average support, either the 18 or 15 moving average support, or and is at a reliable Fibonacci level of 38.2%, 50%, or 61.8%. So once again, this swing low must be at a Fibonacci level and or a moving average support. Okay, and we're looking for a trigger for a long trade. Now, you may not always get a trigger. If you don't get a trigger, then you do not take the trade. Only when you see a valid trigger. So again, what's the valid trigger? At the point of the swing low, we want to see a bullish engulfing pattern, like we've learned recently, or we see a consolidation of four or more small candles like so. So we either see a bullish engulfing or a consolidation of candles. All right. So once we see 1, 2, 3, 4, only when we've got all four setup rules aligned, then we can place our buy order, our stop loss, and our profit target. Okay, so where do we place our entry order? So our entry order would be a buy stop order, okay, right above the high of the engulfing pattern, or right above the high of the consolidation pattern. And you can put it right above the high, rounded to the nearest pip, plus the spread. Okay, so plus the spread. So if the spread is 1 pip spread, put it 1 pip above the high. If it's half a pip spread, put it half a pip above the high. Okay. Next, where do we place our stop loss? We'll place our stop loss just below the current swing low. Okay. And the distance from the entry price to the stop loss price, as you know, is called 1R. So 1R is our risk distance. And again, the 1R must be at least a minimum of 8 pips. If it is not 8 pips, lower the stop loss till you get at least 8 pips. Okay. Now, where do we place our target price? So we can place our target price anywhere from 1.5R to 2R above the entry price. All right, so it depends on the specific wave structure. So usually, I like to place the target price a few pips above the current swing high. All right, so you may say, okay, how many pips above do I place? Well, roughly, I would say, for example, if you look at the previous swing high and the current swing high, right? So I'll measure the distance between the previous swing high and the current swing high. So for example, if this distance is, say, 5 pips, then I'll be confident that when I enter at the start of a new impulsive wave, it should be able to go up at least 5 pips above the current swing high, right? Because the current swing high went 5 pips above the previous swing high. So, you know, roughly I kind of like measure where it go, okay? And my profit target would be at the current swing high or just above it by about 5 pips in this case, all right? So I'm risking 1R to make, for example, 2R. And again, there are cases where I risk 1R to make 1.6 or 1.5 but about 2 hours. So depending on the wave structure, as you trade this strategy more frequently, you get more experience as to where to put your profit target. Now, it's important that before we enter the trade, we ensure that there's no major news release, red news. So again, we go to forexfactory.com to check what is the coming red news events. So if there's a red news affecting the currency of the pair I'm trading, I will avoid taking the trade if the news is coming up within the next 10 candles or the next 2 or 3 hours. Okay, and if I'm already in the trade and there's a red news coming up, I could exit the trade before the news is released if the profit target or the stop loss is not reached yet. All right, so let's take a look at a few examples so you really understand the concept. So the first example is on the pound dollar. All right, so this is a long trade example, and you can see again we've got the wave pattern making higher highs, all right, and making higher lows. Okay, so this is the current swing high, which is above the previous swing high, check. Current swing low above the previous swing low, check. Next, moving averages are in sequence, right? So the 18 moving average, this blue line, above the 50 moving average, and the 200 moving average is below, all right? So we've got all that in sequence, and we need to check that the current swing low is at a reliable support level. So in this case, it is at the 50 EMA. You can see the 50 moving average acts as a support level. So again, either the moving average is a support or it's a Fibonacci level, right? And then we are waiting for a trigger pattern. So in this case, we have got the bullish engulfing candle, right? So we've got the bearish candle with the bullish candle engulfing the red candle. So that's the pattern over there. So once we see the pattern, we place our buy order just above the high of the pattern. So you can place it again just above the high, rounded to the nearest pip, plus the spread. You can always check the spread. What's the spread between the bid and ask? So in this case, we place a buy stop order at 3516. All right, so our buy order is there. And again, our buy order will only be triggered if the price goes to 3516 or higher. You get triggered. If the price doesn't go there, it doesn't go up, then it doesn't get triggered. We're not in the trade. Okay. And our stop loss would be below, again, the swing low pattern, right? Just below the swing low. So in this case, our stop loss is at 3507. So 3516 minus 3507 is 9 pips. So our stop loss distance is 9 pips. So again, our profit target can be 2R. All right. So if this is 1R, we go for 18R. And again, you can go for 1.5R if you want, depending on the pattern. Okay. So in this case, our profit target's at 3534. Right. So notice again, I'm looking at the 50-minute candles. Always check before you place the order. Always check on the hourly candles as well to make sure that the moving averages are also in sequence. So sure enough, the 18 is above the 50 is above the 200. Always check that, okay? So once you place the order, what happens next? The next candle, as you can see, the next candle triggers the order because it goes above the high of the bullish engulfing candle. So it triggers the order and goes up, goes down, goes up, goes down, and hits the profit target at 3534. Okay. So notice again, we enter the pair upon the price breaking above the high of the engulfing pattern. So remember that a buy stop order is used when we want to buy above the current price. Okay, so we do not know if the price will continue going up. So we place a buy stop order to trigger only if the price moves in our favor. Now again, I've mentioned in previous strategies, there are times that by the time you look at the chart, the price has already moved above your intended entry price because you were late to see the trade. So if the price has already moved up, and you have not gotten in yet, don't chase it. Don't enter higher than where you're supposed to enter. So in that case, sometimes you can place a buy limit order. So remember that a buy limit order means you buy lower than the current price. So you're hoping that you place a limit order, the price comes back down to fill your order before proceeding higher, right? So for example, let's imagine that by the time you saw the trade, the price was already here. Okay, let's imagine the price has already gone here. It's already moved up. Okay, so in that case, what you do? Instead of a buy stop order, you use a buy limit order. Okay, so you place a buy limit order at similarly 3516. Okay, so right now the price is at 3523 and your buy order is at 3516. Okay, so you would only get triggered if the price comes back down to 3516. Again, a metaphor is like you want to enter when a bus is at a bus station before it leaves the station, right? But sometimes by the time you go to the bus station, the bus has already left the station. So in that case, don't run after the bus. Don't buy at a higher price. Wait at the bus station. Hopefully the bus comes back to get your order filled before going higher. Now, there are times the bus will continue going up and hit the profit target without you, and that's fine. So in those cases, move on to find the next trade, okay? Now, in this case, what happened was that if you were late and you placed your buy limit order here, the bus did come back down to fill your order, right? And then it went higher. So in this case, you would have gotten filled as well. So do note, once again, let me mention that when you enter a trade, right, if you are entering here, right, once you see that bullish engulfing pattern, your entry is a buy stop order because you're entering only above the current price. You're hoping that the price will go up and trigger your order. If you're late to the trade and it's moved on without you, use a buy limit order and hopefully you'll come back down to trigger your buy limit order before going higher. So, okay, so that's the example of a pound dollar. Okay, let's look at a few more examples. The next example is on franc yen. Okay, and this happened on 16th of May. All right, so where was our entry? Our entry was here. Okay, so again, you can see this pattern over here. All right, boom, 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 boom. There we go. All right, so the current swing high above the previous swing high, current swing low above the previous swing low. Moving averages in sequence. Perfect. We're looking for a trigger price action. So in this case, what happens is when the price reaches this swing low, again, it must be a reliable support. So in this case, notice the support is the 50 moving average. Again, the moving average is acting as a support level. And we see in this case, a consolidation of candles, right? So we can see 1, 2, 3, 4, 5 candles moving sideways. And again, remember, we need at least 4 or more candles. 4 or more candles. So once we see the candles moving sideways, we can say, okay, we enter once the price breaks out of this consolidation, right? Makes a new high. So we place our buy order, in this case, right above the high of these candles, right? So in this case, 3516. We place our stop loss right below the low of the consolidation, which is the swing low, right below the swing low. All right, so the current swing low's there, stop loss at 3507. So again, 3516 minus 3507 is 8 pips. And again, that's our minimum. We need at least 8 pips. So our target price will be, in this case, 16 pips. All right. Again, check on the hourly candles to make sure that it's also in the same sequence, 18 above 50, 50 above 200 at our entry point. So again, once again, we can see this was a trade where it triggered on the next candle. So the next candle made a new high. It triggered our buy order and proceeded to hit our target price of 3534. All right, and we entered upon the break of the high of the consolidation pattern. There we go. Okay, next example is dollar yen. So once again, let's see if you can spot the pattern. There we go. All right, so again, we have got a current swing high above the previous swing high. We have the current swing low above the previous swing low. All right, so this is the current low. Is there a reliable support? Yes, it is. and it is finding support at, again, once again, the 50 moving average acts as a support. All right, and again, we have got our consolidation pattern of 4 more candles over here. Right, so 1, 2, 3, 4, 5 candles. In fact, that forms our little consolidation. Our buy order is right above the high of that consolidation, 112.96. Our stop loss is below the low of the consolidation, 112.87. And again, that's a 9 pip stop loss distance, so our profit target could be 18 pips, for example, right? 1 to 2. Okay. Again, check the hourly candles to make sure that the hourly candles are also aligned. So in this case, the next candle here went up above the high of the consolidation. It triggered our buy order. Okay, so it went up, came down, whoa, almost hitting our stop loss, just missing by 1 pip. It happens sometimes and proceeds to hit our profit target. So this was, all right, a close shave, right? A close shave, but hit the profit target nonetheless. Okay, next one is New Zealand dollar. This was on the 20th of December, and again, see if you can spot the pattern, right? So, boom, 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 boom. There we go. Okay, so again, current swing high above previous swing high, current swing low above previous swing low. Right, so this is our current swing low. So again, are we at a reliable support level? Okay, is there a moving average supporting us, or is it a Fibonacci level? In this case, it is both, right? So you see that it is finding support at the 18 EMA, right? There you go. So current swing low at the 18 EMA support, all right? And if you draw a Fibonacci level, this is A to B. This is actually a Fibonacci level of 38.2. In fact, let me show it to you on the next slide. There we go. Right, so you can see A, B, and C. This is a 38.2% Fibonacci level. So it's got a double support. It's at the 38.2% level and a moving average. So it's a double support. We're confident this is the low of the dip. And it's going to go higher. We need to wait for a trigger candle, a trigger pattern. So the trigger pattern in this case is a bullish engulfing, right? So these two candles make up the engulfing pattern, as you can see. So again, once we see the engulfing pattern, we place our buy order above the high plus the spread. In this case, buy order at 7104, stop loss below the low, at least 8 pips. So in this case, it's 7096. So we've got 8 pip stop loss, right? And our profit target is, again, 1.5 or 2 hour above our entry price. So in this case, you can see that, right, after this bullish engulfing pattern, the next candle went up, triggered our buy order here. We entered, it went up, and we hit our profit target over there, getting us a 16 pip, 2 hour profit target. So again, the entry was the break above the high of the engulfing pattern. Alright, so I just entered a long trade on New Zealand yen. You can see this is bouncing off the 18 EMA over here. And at the same time, you can see it's a Fibonacci level. If you draw from the start of the impulsive wave A to the end of the impulsive wave B, you can see that it's at the 50% retracement level, right? So there's A, B, C, 50% retracement level. And is it on a clear uptrend? Let's take a very quick look. Yes, it was. It is. 18 EMA above the 50, 50 above the 200. Again, checking on the hourly candles, H1, you can also see on a clear uptrend, the 18 above the 50, above the 200. And you can see on the hourly candles that the price is finding support at the 6 EMA. And that corresponds to support on the 18 EMA on the 50-minute candles, right? So if you can see over here, we have got, again, higher highs and higher lows. Okay, so the current swing high is is higher than the previous swing high, and the current swing low is higher than the previous swing low. So we've got our uptrend wave pattern that we need to have. So once we see that bounce, we're waiting for a trigger. So as you can see, this was the trigger. This is a bullish engulfing candle. Alright, so the body of the bullish candle completely engulfs the body of the bearish candle. So once we've got that trigger, I place my buy order, right? So I place my buy order just above the high of this bullish engulfing candle. That's the green line that you see over there. And my stop loss is placed right below the low of the bullish engulfing candle. But again, remember that the stop loss must be at least 8 pips away. So I had to move my stop loss to this level over here. So my entry price is 7658. My stop loss is 7650. So that's 8 pips, as you can see. So my risk is 8 pips. You can just draw it over here. That's 1 R, that's 8 pips. And my profit target could be 1.5 or 2R. Okay, so in this case, I'm aiming for 2R. Let's see if I can hit 2R, which means my profit target would be 16 pips above my entry price. So 7658 plus 16 pips, you get a profit target of 7674. Okay, so once you place the trade, let it run and see if you can hit your profit target. All right, if I zoom out, you can see the profit target. There we go. All right, so this red line is the profit target, this green line is my entry, and that's my stop loss. Okay, so again, once I place a trade, usually I would leave it and see if it hits the profit target or the stop loss. Hard to say the moment you enter it. So let's see what happens in a short while. Okay, so following up with our New Zealand yen trade, so we entered the trade at 7658. This is the green line over here. Our stop loss is over there, 8 pips away at 7650. And our profit target's either 2R or 1.5R away. And you can see the trade is doing pretty well. It's now moving towards the profit target. Because it's Friday, you know, I want to really exit the trade before the end of the day. So I place my profit target over there. Right, I can see this red line over there. So usually I would target 2R, okay, but because it's going to be a bit hard to reach because the swing high is over there, you know, I'm just conservatively taking a 1.5R target. So that's fine. You can take anything from a 1.5 to 2R target and that'll be fine, right? You can see the running profits over there. And once you're in the trade, just leave it to hit the profit target or the stop loss, all right? Okay, so following up on our trade, you can see that New Zealand yen, we have hit our profit target, okay? And we've hit our max profit for this trade, right? Profit target is 76.71. So I targeted 1.5R for this trade because again, this was the previous swing high. So I normally like to target just above the previous swing high, right? So in this case, going for 2R was a bit of a stretch, so I went for 1.5R instead and took the profit over there.